The difference between speculation and investing is everything. And it's the number one issue in terms of how people either approach the market correctly or incorrectly. Our training is all about investing, and it's the key differentiating factor between our seminar and lots of the rest, for want of a better description. Investing is investing in companies on the basis of values, as in, is there value for your pound or your euro or your dollar? There's different ways of measuring that, but ultimately ILTB does it its own way, and we teach you that on the day. Speculating is something different entirely. And to understand the difference, one has to go back to how does the stock market itself generate wealth, as it does over time, just like property. But the key word is time. It does not happen overnight. If you're speculating in the stock market, essentially what you're doing is you're trying to get your return out of the stock market on a very short term. Of course, the stock market doesn't produce any return on a 1 week, 1 month, or indeed 3 month basis. It simply doesn't do it. The stock market produces wealth as companies within the market increase their profits and their cash flows and dividends over time. And that happens on a 6 monthly or an annual basis as companies report higher earnings, hopefully. So if you're somebody trading or speculating in the market, you have to acknowledge you're trading a zero-sum game, because the market in the short term is a zero-sum game. Speculating is trying to get your return out of the market in the short term, but the minute you start doing that, you have to acknowledge you're playing with a zero-sum game. When you're playing with a zero-sum game, if you expect to get a return out of the market, then it's akin to trying to play poker and win at poker every single time. You're simply not going to do it. In aggregate, speculators will not get the market return or even close to it. The returns in the stock market accrue to the investor, just like they do in property. Nobody ever questions that in property. You know, they buy the property, they hold it, and if the property market moves up over time, which it tends to do, then their property rises in value. If you approach the stock market in the same way, you're investing and you'll get the returns.